Hello everyone, this is today's video analysis for August 20th, 2018. Today we're taking a look at the AUDUSD, the Australian versus the US dollar for today's trade analysis. Looking here on the daily time frame, not too hard to see, this currency pair has been in a downtrend for quite a long time. We're going all the way back up here to the very top of the chart into, well, January, mid to late January. We capped out here at the resistance high into the low 0.8130 or so level, and it's been moving down ever since. We've had periods of rallying and pullbacks here all along the overall downtrend. You can see the short black trends as the market pulled back several periods and then returning to the downtrend. In recent days, we've been in a period of ranging congestion down here, highlighted by the black box bottom right hand side of the trend. And last week we saw the market make a new low all the way down into the 7,200 level or so, and now has made somewhat of a comeback over the past few days. Let's zoom it in a little bit so we can see that a little bit better. There it is, breaking under the purple zone, pushing all the way down here to the pink zone, and now the rally back to the purple shaded area. Zoom it out one time. Let's take a look at that purple shaded area, 0.7310, 0.7330. About 20 pips highlighted there in purple. You can see back in time, of course not too hard to see, is the area of support here at the red circle, and the area of support not too far beyond that where the second red circle is. You can see those two supports. So what we know about support as technical traders is that it can help us identify future potential resistance. And a good example of that is right here where we saw support at this secondary black box, the next one up right here where I've just put this wider red circle. You can see the supports all into that pink zone, and the market came up and found resistance there. So there's a good example just here on the same chart where the market found support at a level here, 74.85, 75.05. Broke out, went lower, it came back up, found resistance, and went back down. So that's the kind of example that we're looking at. Historical support acting as resistance. We bring it into our current time again, historical support. Even today, Friday, and today, finding resistance here at the purple shaded area. So for the day today, as long as it's underneath that purple zone, the first discussion we would have is we don't want to buy. Buying underneath that purple zone becomes a difficult scenario. Really, if you're looking to go long and buy the AUDUSD, this is not the place to do it. Well, there's two reasons to do that. One, it breaks above the purple zone, or two, pulls back into support, which at this point is all the way back down here at this yellow shaded area. That would be our first support we'd run into. So if you're a buyer looking to go long, you're either back down here at the yellow zone waiting for it to dip, or waiting for it to break above the purple zone. We'll call it 73.30. Then we could look for it to go higher, maybe to the blue zone. So you're not buying today. If you're not buying, maybe there's an opportunity intraday resistance to take a short into 73.10. It's only 4 or 5 pips higher than current market price. You could target back to the yellow zone. Maybe even if the return of the downtrend happens, we look to target down here to the pink zone or lower if there's a new low to be had here for the AUDUSD. So purple zone's your main area to focus on. Either it breaks above it to buy it, or finds resistance to go back down to the yellow zone or lower. If you're making a trading decision, it's right here into the low 73s. Let's take it down to the 4-hour time frame just to get a quick look at the current market price action. And really there's not much to speak about yet this week. Let's take a look. We've been bouncing around here for the past several hours, really since market open, in about a 10 to 15 pip, maybe a maximum about 20 pips, bouncing around in here for the past several hours. So again, it really doesn't change the theme of our analysis. We're looking at this purple zone. One of two things is going to happen. It's either going to break through and go higher, hasn't done that yet, bounce off and go back down, hasn't done that yet, so we're waiting for one of those two things to happen. I think if anything, your risk reward is more balanced in the favor of going short. Stop loss just above the purple zone. That way, if it breaks above, you have minimum impact to your trading account. If you were to buy it right now, I think at minimum your stop loss for a long shot here would be way down here under the yellow zone in that last low. So risk reward wise, doesn't make sense to buy it either. Makes more sense to sell it. Just Fibonacci real quick. Highest high, lowest low as we view it here on this vantage point that we're looking at the market. Puts the 382 at 72.98. We're just a hair above that. 50% just at the top of the purple zone, 618 at the blue zone. So at least right now, something that's interesting is that we are sitting just on top of the 382 of that previous down range. That's a difficult reason to go short on top of the 382. So at least right now, maybe we're waiting for some more price action this week before we take a trade on the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.